All right, so life insurance. It's one of those things where, you really should understand it, but it's easy to kind of put it off. We're going to dig into all that today, and hopefully by the end you'll feel a little more, prepared to actually deal with life insurance.
Yeah.
We're tackling the big question, term or whole life, and more importantly, figuring out how that applies to you specifically. Like, what do you need to know to make this decision, not just like a general...
Absolutely. Yeah, because it's really not one size fits all.
Right.
And honestly, a lot of people get this wrong because they don't have all the info.
Yeah, for sure.
So that's what we're here for.
Totally. And we've got a great resource to help us with this, an article from ThriveXtina, and it really breaks down all these key differences between term and whole life insurance. And they have a really great way of simplifying this right off the bat, thinking of term life insurance as renting your coverage and whole life insurance as owning.
I love that analogy.
It's so good, right?
Yeah.
It makes it so much more approachable.
It really clicks for people, because it makes you think, okay, well, do I want short-term coverage or am I looking for something that's going to last, a lifetime? Just like renting or buying a house depends on your needs at that time.
Right.
It's the same with this.
It's not about one being better than the other. It's just what works for you.
What aligns with where you are in life? Like, what are your expenses? What does your lifestyle look like? What are your goals? All those things factor in.
Totally. So let's dive into these two a little bit deeper, starting with term life insurance, the renting option. What does that actually look like?
So term life insurance, think of it this way. You're covered for a set period of time, like a lease, right? Could be 10 years, 20 years, 30 years. And generally, it comes with lower payments up front.
Okay.
Which is why it's so popular, especially for people who maybe have like a mortgage or a young kid.
So you're covered like just in case during that time.
Exactly. Yeah. Covering those what if years.
Exactly. But what happens after that term is up? Is it like an apartment lease where you can just like, oh, let's just renew for another year?
Well, you can often renew a term policy, but, and this is important, your payments, they're probably going to go way up.
Oh, really?
Yeah, you're older, which means more risk for the insurance company.
Makes sense.
So they charge you more.
Okay, so even though it might seem cheaper at the beginning, got to think about those renewals.
Absolutely. And honestly, sometimes you might not even qualify to renew, depending on your health or other things that have changed in your life.
So it's not a guarantee?
Nope, not at all.
Okay, so that's term life insurance. In a nutshell, short-term coverage with some potential bumps down the road. What about whole life insurance then? The owning option.
Okay, so with whole life, you're buying a policy that's designed to last your whole life, as the name suggests.
Right.
You've got that sense of permanence, knowing you're covered no matter what.
And that peace of mind, that must come with a different kind of price tag though, right?
You are right. You will generally pay higher premiums for whole life than you would for term, especially when you're younger. But, and this is a big but, those payments will usually stay the same throughout your life. No surprises.
Okay, that stability is definitely a plus, especially thinking long term.
Right.
And then there's this whole other part of whole life insurance, cash value. What is that all about?
That's where things get really interesting and honestly where a lot of people get confused. So basically with whole life, part of what you pay goes towards that death benefit, the payout to your family if something happens. And then another part is going towards building this cash value.
So it's like a savings account within your insurance policy.
Yeah, exactly.
Wow, a savings account built right in. That's pretty cool, actually. I've never thought of insurance that way.
Right. It's a pretty unique thing about whole life insurance. And what's really neat is this cash value, it grows over time and you don't pay taxes on that growth until you actually take the money out.
Oh, so there are some tax benefits too.
Yeah, potentially. It's all tax deferred. So let's say, for example, you've managed to build up like $10,000 in cash value over 10 years. You could actually borrow against that money if you needed to, say for a big expense, like a home improvement project.
Oh, wow.
Or even college tuition.
So you're borrowing from yourself, essentially.
That's the idea. And the interest rates are usually much better than what you'd get with a regular loan.
That's super handy.
Ah.
But the article did mention that even though this cash value thing exists, it's not really why you get whole life insurance.
You're totally right. The number one reason to have whole life insurance is to make sure your family is taken care of financially if you die. That's the heart of it. The cash value is really more like a bonus. It's not the main event.
That makes sense. It's not about getting rich. It's about having that safety net.
Yeah.
But it's cool that it could also grow over time.
Exactly. And that kind of takes us back to that renting versus owning idea. With term life, once that term ends, you don't really have anything to show for all those payments you made.
Right.
But with whole life, you've got that cash value. It's like an asset you've been building.
It's kind of like renting an apartment versus paying down a mortgage.
Yeah.
Right? One helps you build wealth over time.
Exactly. It's a good way to think about it. And, speaking of figuring out which type of insurance fits where you're at in life, the article gives a really good example. They talk about this couple, Stephen and Hannah,
Oh, yeah.
and they're trying to decide, term or whole life.
Yeah, I remember that. It really shows how different everyone's situation is.
Yeah.
There's no one right answer. They were in their late 20s, right? Yeah. Just had a baby, so money's a little tight.
Exactly. And they were leaning more towards the term life insurance, which honestly makes a lot of sense for them right now.
Yeah.
Because they need a decent amount of coverage, but they need to keep the costs down.
To make sure their little one is taken care of.
Exactly. If something were to happen.
Definitely. But it did say that later on they might rethink that and consider switching to whole life.
You got it. Maybe they start making more money. Or maybe they just decide that they like the idea of having that cash value building up.
You might need more security later on, too,
Right.
as their needs change.
It's funny. When we bought our first house, I remember being so overwhelmed by all the financial decisions. Like, we were so focused on getting a good interest rate on our mortgage and buying furniture and all this other stuff. And then it's like, oh, yeah, life insurance. We should probably figure that out, too.
A lot of people feel that way.
Yeah.
It's just one of those things, people don't always see it as this important part of their whole financial plan.
Right. We ended up going with the term life policy, mainly because it was just way easier on our budget at the time.
But going through that whole process really showed me how important it is to actually talk about this stuff and then to revisit those conversations as your life changes.
So important. It's not something you decide once and then never think about again, Your life changes, your insurance needs change. You can always adjust your coverage as you go, add things to your policy.
Oh, like what kinds of things can you add?
Well, they're called riders, and they let you customize your policy. So say you have a family history of a certain illness, you could add a critical illness rider, which would give you some extra coverage if you were diagnosed with that illness.
That's really good to know. So it's all about making it fit your own life, your own health, whatever your family needs.
Exactly. You've got options. And like we've been talking about, picking the right insurance company, that's a huge part of this too. And it made me think about something else we talked about earlier. Remember those different types of insurance companies? The mutual companies versus the stock companies?
Yeah, picking the right company. That's a big one.
Yeah.
I mean, it's not like just choosing, I don't know, a cell phone plan or something.
Right.
This is a big deal.
It is, and I think the article brought up a really good point about that, talking about the difference between those two types of companies, mutual companies and stock companies. It seems kind of like, oh, whatever, what's the difference? But it actually matters.
Yeah, it's easy to overlook those details.
It is, but it can make a big difference. Basically, it comes down to who benefits if the company does well. Is it the people who have the policies, or is it, stockholders?
Okay, so let's break that down a little bit. With a mutual company, it's the policyholders who are kind of like part owners.
Right. That's exactly it. It's like a co-op,
Yeah.
Everybody's in it together. And since those policyholders are the owners, if the company makes a profit, that money usually goes back to them. Like maybe they get dividends or their premiums go down.
So it feels more community-minded, like everyone benefits.
Exactly. It's not just, here's your policy, see you later. And then on the other hand, you've got the stock companies, which is, that's how most companies are set up.
The more traditional model, yeah.
Right. And in that case, the company is owned by the people who own stock in it. And those shareholders, they want to see a return on their investment. So the profits go to them, not necessarily back to the policyholders.
So are you saying that one type of company is always better than the other?
Not really. I think it really depends what you're looking for, If you really like that whole idea of shared ownership and maybe getting some dividends down the line, a mutual company could be a really good fit. But if you're thinking more about like growth potential and you're okay with that traditional stock market kind of setup, then maybe a stock company is more your speed.
It goes back to that idea of figuring out what's important to you.
Absolutely. What aligns with your goals?
We have covered so much ground today about life insurance.
Mm.
Wow. I mean, it's clear that there's a lot more to it than maybe I think a lot of people realize at first.
Yeah, for sure. And more importantly, don't rush into this decision. Take your time, ask questions, do your research.
Yeah.
Exactly. So for everyone listening, let's just recap really quickly the key things we talked about. At the very beginning, we talked about how term life insurance, that's kind of like renting coverage, right? You're covered for a certain period of time. It's usually a bit easier on your wallet up front, but it's not forever.
And then we talked about whole life insurance, which is more like owning. You pay more, but you're covered for life. And there's that whole cash value component where it's almost like you've got a savings account growing alongside your policy.
Right. And of course, as we were just discussing, choosing the right company, that's crucial too. Figuring out whether you like the idea of a mutual company where you're kind of a part owner or a stock company. Well said. I think we covered it all. And hey, before we go, I want to leave everyone with something to think about. You know how the article mentioned that life insurance, it's not really an investment in the traditional sense? So knowing that, how does that change how you think about that whole cash value thing that comes with whole life insurance?
Ooh, that's a really good question. Something to ponder. It really makes you think about it in a different way, huh?
Well, big thanks to all our listeners for joining us for this deep dive. We hope this has given you a lot to think about as you plan for your financial future. And remember, you've got this.